However, the same cannot be said for trading. If we want to try and set a trading growth target for our business by the end of the year, and say we want to grow our trading account by 100%, that's our target for the year, this is the wrong thing to do. This is one thing that you cannot do in your trading, and it will set you up for failure. One of the biggest things that I am against is setting monetary goals for your trading. And the biggest reason behind that is because you have no control over when your system will produce profits month by month, trade by trade, week by week, year by year. It's like the example of the roulette wheel that we spoke about previously. In the casino has got no control over when they're going to have a winning spin of the roulette wheel or a losing spin of the roulette wheel. They just know that over a large sample of spins, they will eventually be profitable. And the same applies in our trading. We have no control and no ability to ensure and guarantee that January will be a growth month, and that February will be a growth month, and that we'll have a great Q4 and a great Q3, and that there'll be certain down months, but we've got that within our control. We can't go and expand our sales team or start trading the markets more and over trading, because that can sometimes lead to worse results in your trading. But we need to stick to our trading system and let it play out, and eventually our edge will shine within the markets and we will start to make a profit. But we can't control that month by month. All we need to do is focus on it trade by trade. So at the basic lowest level, you've got your trades along the bottom there. 1, 2, 3, 4, 5, all the way to 10 trades. And you take your first trade, you make a 2% profit. Then you move on to your next trade, you make a 2% profit. Then you lose 2%, then you lose another 2%, you're back to break even. Then up 1, and so the cycle goes on and on and on. We have a break-even trade on your 6th trade, then you're up 1%, up 3%, then down 1 and down another 1. After 10 trades in a row, you add it up and you're up 2%. Now you've got no control over when these winners and losers will be distributed throughout these 10 trades. You could have had all trades come up first, all your winning trades might have happened first, and then all the losing trades afterwards. You could have had 4 winning trades, then 4 losing trades, and then the break-even trade, and then a last winner. But those winners and losers are randomly distributed over a large sample of trades. And this is what's known as the random probability theory. As a trader, you've got no control over how those winners and losers will be distributed throughout a large sample of trades. But all you've got control over is executing your trading system, one trade after another, one trade after another, not breaking your trading rules, sticking to the system, and pushing through trade after trade. When you aggregate all these trades up together, you can then start to consolidate them and zoom out one time frame further. So instead of looking at it at one trade, second trade, third trade, fourth trade, you can start to group these trades into samples of trades and view your profitability maybe over days of the week. So maybe on a Monday, Tuesday, Wednesday, Thursday, if you take those same 10 trades and you apply it over the days of the week, maybe Monday came out up 1%, Tuesday 2%, then Wednesday down 2%, Thursday was break even, and Friday you were up percent. That was a total of 2% across your 10 trades. Then the following week, you take the same approach. Monday you had no trades at all, then Tuesday down 2, Wednesday down 2, Thursday down 1, and Friday up 1. For this week now, you're down 4%. And so you can see that those winners and losers are randomly spread amongst large samples of trades. We can now zoom this out one step further, and instead of looking at it by day, we can look at our profitability by week. And in week 1, we can maybe say that we're up 2%, then we're down 4%, then we're down 1%, and in the 4th week and at the end of the month, we have a great week, we're up 6%, and we aggregate that up together, and we're up 3% total for the month. Across those 4 weeks or that 1 month, if you add up all those trades and all those weeks together, maybe you're able to take 40 trades over that month and over those 4 weeks. Maybe week 1 was 10 trades, week 2 was 5 trades, week 3 was 15 trades, and in week 4 another 10 trades. That got you to your 40 trades, but they were randomly spread amongst the weeks, days, and in the order that your winners and traders revealed themselves. You can now take this one step further and zoom out to months of the year. So January, February, all the way through to December. Once again, you can say, how did I do within a month? You might have had 5% up in January, 10% up in Feb, down 5% in March, and then you can add up those 3 months together to see how you performed within a quarter as well. And across that quarter, you might have taken 100 trades, and in January, that might have been 30 trades, followed in Feb by another 30 trades, and in March, you took 40 trades. And so your system and your edge and the way that you approach the market, those trades will be random and you've got no control over that. If we continue with that cycle throughout the rest of the year, and we say that by the end of the year, we've had a string of winning months, we've had a string of losing months, but all in all, by year end, we're up total 30% for our business. Now that 30% you can see was made up by 3 big months. We had a good month in Feb, we had a good August, and we had a good November. We had some bad months as well. We had quite a bad March. We had a very bad July, followed by 2 consecutive losing months, September, October. And what you'll also notice in trading that you come across quite a lot is what's known as drawdown. You have a period of losing trades, a string of losing trades in a row, where your equity curve and the growth of your account remains in drawdown. It's not making new equity curve highs. You're not growing your account. It's almost consolidating, moving sideways, or it's moving down lower, and you're losing money over a sustained period of time. The thing with this, though, is that there's nothing you can do about that, and you need to just trade through that drawdown. Whereas in a traditional business model, if you were looking at a similar chart like this in a traditional business model, and you had a period like March, April, May, June, July, in a traditional business, nobody would just sit back and push through that. They would start to amplify their ability to try and offset that. They would try and hire more salespeople. They would maybe fire salespeople because they're not doing their job. They would try to increase marketing. They would do more advertising. They might start discounting some products in order to try and offset and try and get the business back on a growth track. But you can't do that in trading, because trading, there's going to be drawdowns. There's going to be periods of drawdown. And sometimes what people try and do to offset these periods of drawdown is they start trying to trade other strategies that they've never tested and that they're not confident in. They try to trade other markets that they haven't traded. They start taking trades that don't meet their rules 100%. And that all starts leading to overtrading and often results in your performance being further affected and your account losing even more money. What you need to do with trading, and what you need to realize with trading, you're going to have periods of winners, you're going to have periods of losers, and you're going to have periods where all of that is randomly distributed. But you always need to keep an eye on the sample of trades and the larger number of trades. Don't look at it on a trade-to-trade basis, but look at it rather in weeks, look at it in months, look at it in quarters, and to see over a sample of 20 trades or 25 trades, is your system still profitable? Don't look at it like I was right for 3 trades in a row and then my 4th and 5th trade was wrong and I lost money, so I'm scrapping the system. Don't do that. Look at it over a larger sample of trades and say, how am I doing every 25 trades? Am I still profitable? Just like the casino, they know that maybe over 100 spins of the roulette wheel, they're going to lose money on some spins, but after 100 spins and a certain amount of money that's gone through the roulette table, they will generate a profit over a larger sample of spins. And you need to look at your trading and your trading business in the exact same way. You then could now zoom out one step further and look at your trading in years. And year 1, you might be up 30. Year 2, you might be up 60, then 20, and then 70. When you average your years out, on average, you make 45%. Some years you're below that. Year 1, you were below the 45. Year 2, you made up for it. Year 3, you're down 20%. And then year 4, you're up. So in your trading business, you're going to have to expect that there are going to be good days, there are going to be good weeks, there are going to be good months and years. But with that, there are 2 sides to a coin always. You're also going to have bad days, bad weeks, bad months, and bad years. And that is just the name of the game and the nature of the beast. Now, there are certain ways that you can boost the profits in your trading system and in your trading business. Just like in the traditional business model, you could add more products to your catalog and sell different things. You can do the same in your trading. So in your trading business model, let's say that you're trading just the Forex market and you're currently trading euro, dollar, and pound linked to other various different currencies. And these markets are going to have various different performances, volatility, and number of trades. You might have one year where you do really well on the euro, but then the dollar is really volatile or the pound is really volatile, and you don't get as many trades on one market as you did in another. And you start to compare that month on month, week on week, year on year. The performances are going to fluctuate between the various different markets that you trade. Same as the traditional business model. You might do well on one type of t-shirt or sunglass or cap, whatever it may mean. One year or 1 month you do really well, but then you'll find at other times of the year or other seasons that is not such a good seller and other products are in demand. The same as with your trading business model. Various different markets are going to perform differently at different periods of time. The one way to further boost your profits is to trade more markets. So you can add more currency pairs or different financial assets to trade. You can say instead of just trading Forex, you can trade stocks or cryptocurrency or whatever it may mean. So that's one way of being able to boost your trading business profits. And the other way is to also add more systems to your trading methodology. Maybe you trade the markets only with one system and you trade it on one specific time frame. Try to find another system that trades the same markets or different markets on a larger time frame or looks for different setups. That will give you more trades, which will hopefully give you a greater edge within the market, and that will help you to boost your profits. So bottom line, how much do you need to start your trading business? And I hope that that is now a question that you can answer for yourself. Understanding the various different things that you need to look towards in terms of costs and profitability. How much capital do you have? What's your current living expense? What your current lifestyle expense is? And how trading is no different to running a traditional business. If you are thinking to yourself, how much do I need in order to start a traditional business? And how much does that business need to generate in order for me to live off? You need to look at your trading the exact same way and say, this is how much I need. This is how much I have. How can I boost it? How can I increase it? Also without blowing up your trading capital and risking too much money and eventually wiping your trading account out and having nothing left to trade with.